We've got Somil Mehta of Mirai Asset by Sher Khan joining in, Parag Thakkar of Fort Capital as well. Thank you so much, gentlemen, and very good morning to you. Somil, is there any reason for Neeraj to get his dancing shoes on, or shall we say keep it in the cupboard for now?
I think keep it in the cupboard for now. It doesn't doesn't look like anything is happening. Good morning to everyone. Yeah, Nifty. We've seen Nifty at 25,000 levels since May. I think now it's been 3 to 4 months, and we are looking at this level from last 3 to 4 months. Uh, we have changed the range from 24,500 25,000 to 25,500 and 25,000. So the range has moved up. The trend in the medium term outlook is still positive. We are making high tops, high bottom on the weekly charts, but on the daily charts we have started making low tops, low bottom formation. We have closed below 20 daily moving average. Till the time from here on, I think till the time we do not close, Nifty does not close above 25,320. I think till that time, the trend in the very short term still remains negative. Yesterday, we have closed above 40 daily moving average. Yesterday, after a negative close, still we have closed above the 40 daily moving average, which is a positive sign. I'm hoping that this short-term trend reverses from here and we close about 25,300. Stock-specific action has been there. Sector-specific action has been there. IT has been a little weak. PSU banking has been a little weak, but I think on the other side, metals are doing good. Oil and gas is doing a little, some of the stocks are doing good. So I'm a little positive. Undertone still remains positive, and buy and decline should be the strategy in the medium term outlook. In the banking, bank as well is the same thing. The lower end of the range is 56,200 and the upper end is around 57,300. Yesterday was the third time when we Bank Nifty took resistance at 57,300, which now becomes a very strong resistance.
Okay.
So still range bound. Yeah.
Okay, very quickly, topics this morning, Somil?
The topics would be Indigo, small consolidation breakout on the upside. Stop loss would be 5860. Target would be 6080. And IOC would be the second pick. Same consolidation break on the upside. Stop loss would be 149 and target would be 158.
Indigo and IOC on track for his top picks. Parag, I will come to you in just a minute, but it's that time of the morning where we talk about what has been heard on the street. Samit Sarkar joins it.
Well, multiple stocks that remain in focus. Firstly, Sammaan Capital and Suzlon, and dealers are indicating in both these counters there are expectations of management changes, and dealers are indicating their clients to buy Sammaan Capital and sell Suzlon. When it comes to Syngene, the stock was down in trade in open yesterday, but that was because of a weak set of numbers that had come in from one of its global peer. But dealers are indicating that there are buy flows on HNI desk on expectations of strong Q1 numbers coming in from Syngene. For Nestle, dealers are indicating that large HNIs have been buying Nestle in trade. For Shriram Finance, there are buy flows on domestic institutional investor desk. For Kotak Mahindra Bank, dealers indicated there are sell flows on large HNI desk just ahead of its numbers. The Kotak Mahindra Bank will be reporting its numbers on July 26th, which is a Saturday. And lastly, when it comes to VST tillers, GE, Vernova and Marathon Next, there are buy flows on these counters on expectations of these stocks could potentially get included in the MSCI index. So keep an eye out for GE, Vernova, VST tillers and Marathon Next. And as we had indicated last week on July 17th, that Paytm is expected to report a profit that has come in, and there have been multiple upgrades and target price revision also, which has followed post the strong numbers that Paytm has reported yesterday.
You know, it's very interesting because the three names for the MSCI inclusion, they're not necessarily the most liquid names.
Right.
VST tillers is
And
hardly
hence,
liquid.
exactly. And they could get included in the small cap is what the dealers are indicating. So if that happens, then there could be a big spurt in the volumes that we could see.
And VST tillers not to be confused with VST Industries, who posted its numbers yesterday, which were not good numbers.
Yeah. A cigarette company and a tiller company.
Completely different. Completely different.
Okay, Samit there with the dealing room buzz this morning. But let me go across to Parag Thakkar. Parag Thakkar, I think the stock of the day to talk about is definitely Paytm. I don't know if you tracked this carefully or if you actually saw what the commentary was from the management yesterday. They seem to be saying that we told you so that this would happen and we're finally here.
Yeah, so good for Paytm shareholders who had suffered a lot in the past.
Yeah.
Stock has recovered from 440 levels to 1000 levels now. And I think based on the results, it will further go up and based on the various sell-side commentaries which I'm hearing. But remember, see, it is a 67,000 crore market cap company which has done an EBITDA of 72 crores. So, of course, the business has a huge operating leverage. We don't own it, so I would not restrict my comments. But I would say that I'm happy for at least the shareholders who had applied in the IPO and the price is coming.
Okay. Okay. All right. In fact, let's quickly go through the earnings scorecard, and Paytm, of course, on top of that list. So these are the earnings which have come in post-market close yesterday and which will have some impact today. We're just telling you how we are looking at these numbers. Paytm, first quarterly profit, so definitely a thumbs up there. Dixon Tech have seen a doubling in their revenue and their EBITDA, thumbs up there. Dalmia Bharat, EBITDA has risen 32%, margins up 570 basis points in the green. United Breweries has seen strong volume growth, especially in their premium segment. That has gone up 46%. So United Breweries is a good set of numbers. Not so much for Jana Small Finance Bank. Recovery is still a quarter or two away. Credit Access Grameen will also see some pain coming in. AUM growth to remain muted in the second quarter. Wellspun Specialty has seen a margin contraction and quite a sharp one there from 6.7% to 2.1%. KEI Industries, though, strong revenue and PAT growth should be positive. There are a few more. JSW Infra would be a neutral. Cyan DLM is a positive. Operating performance beats estimates. Zensar Tech has seen revenue and profits beating estimates. Somil, some of these that we've talked about, any of them on the charts that you are tracking or are popping out for you because they're going to be in focus due to their numbers?
JSW Infra is the one which I'm tracking. It is trading about 200 daily moving average, closed about 20 and 40 daily moving average. In the short term, it's looking great. If it closes above the breakout level for this consolidation, which is going on since last 1.5 months, the breakout level is around 325. Once it closes above 325, the next level in the medium term outlook would be 355s. So I'll be targeting 355 in the medium term outlook, and the stop loss would be around 305.
Okay, let's talk about Dixon Tech because the numbers are out. Parag Thakkar, I'm coming to you on this one, and I'm pretty sure I know what you're going to say on the valuation front. But did you look at the numbers? And is there any comfort at all? There are some people that are giving a 20,000 rupee target for the stock. What do you think?
Yeah, sure. So basically, see, numbers are good, no doubt about it. The opportunity size is good, as I always keep saying. But market cap of 97,000 crore for a EBITDA of 2,000 crores is a little bit stretched in my view. Although, of course, the stock can do well from here also. But we are not, we are conventional value investors and contra investors. So I would say that I will repeat my top buys, which is DLF, Reliance, BPCL. Of course, Infosys I'm equal weight. Today, Infosys is going to report numbers. 4% dividend yield again, 5% OCF yield. I'm keeping my fingers crossed that Infosys can report good, decent numbers. If they do so, definitely I'm going to increase my weight. And the major concern in IT right now is, of course, because of the intense competition and lesser demand. There is a margin compromise which IT companies are doing. If Infosys negates that particular fear, I think I'll be very happy to add Infosys.
So those are your top picks. You've also consistently spoken about the cement pack, and quite a few of those names, Parag Bhai, have been posting reasonably good numbers. overnight, or rather last evening, we saw Dalmia Bharat, and seemingly that they have sacrificed volume growth for better realizations, and that is evident in the improvement in the EBITDA margins that they've seen, and seemingly the pricing context is good for them as well in their market, in their home market in the south. What do you make of the numbers? And again, would you be positive on the cement pack as a whole? Which would you pick up?
So, luckily, by God's grace, in the middle of this Dixons and Paytms of the world, my cement has worked. So, from December month, I was extremely bullish on cement. Just one reason, that all companies were struggling. The cement prices were at all-time low. So, there was only one way to go, which was increase the prices. And that has happened in January to March in North and East, and followed by from 1st April, it has happened in South. And Dalmia was a combination of South and East both. So 25% of that volume comes from South and remaining from the East. Nuvoco Vistas also East player. So I am basically very happy to share with you that luckily we have benefited significantly. I had 15% weight in cement in my portfolio, and I am actually in the middle of booking profits in many of the stocks because they have rallied significantly and given a huge outperformance to the portfolio.
You know, Parag bhai, yes, everything happens by God's grace, but you should give yourself credit because you spotted it in the middle of these Dixons and Paytms. Which ones are you booking profits in, if we could ask?
No, so basically, I would like to say that most of them I have booked profits. I'm sitting on very little amount of cement stocks now. And see, but recently I added a name like India Cement. After Ultratech comments that South is now new North, which was a very good comment, which suggests you that South there will be good pricing discipline and increased profitability. So very small quantity India Cement recently added, but I would say that what I am trying to say is that in the 2 months after 2 months of monsoon, also the prices have held on, which is what Ultratech has also said. That tells you that the longer term picture is also good. But as I always keep saying, when you have very good times, when you get 25-30% return, 25% alpha, you should book out some profits because ultimately, who can predict tomorrow? So
okay, just to very quickly close out this conversation on cement, then Parag bhai, are you saying that there is nothing that can be bought in the cement pack as things stand right now at these prices?
No, I am not saying that. I'm not saying. It is just because that I got a very good alpha in my portfolio due to cement and I was terribly overweight, 15%. Can you imagine? 15% of the portfolio was cement. So that's why I felt it prudent and rational to cut down some exposures. Otherwise, I think there's nothing on the table or on the ground which suggests you that cement is the story is over.
Speaking of KEI and speaking of the wire play, or the wire and cable play, I'm just wondering what you think, because you had a couple of results that were absolutely fantastic. Even in a situation where a company is performing badly, the wire and cable business is doing good, but the consumer discretionary space is not doing good. So is this a space that you're tracking, and would you buy into any of these companies?
So, sorry, this is for me?
Yes.
Yeah. So I have bought Havels actually very recently in our portfolio because I feel that a lot of this negativity around early onset of monsoon and so disrupting summer, and so the Lloyd's portfolio suffering. I think a lot of those negatives are behind. Now, as you rightly said, wire and cable business grew by 27% for them in this particular quarter. And plus, they have a lot of other portfolios. So lighting business, they are witnessing good traction. They are focusing on renewable business now. They're investing big behind it. It's a good company, strong brand, net cash balance sheet, 25% ROC. So, and stock has not done since long, stock has actually not done anything. I like such blue chips when they struggle. And so that's why, although it is also expensive on the optical numbers, but it's a time-tested business with time-tested promoter. So we have bought into it. The thing which attracts me to this particular company is a wide range of portfolio. Festive season is nearby, they can do well. And the worst is behind in terms of AC thing, whatever has happened due to this early onset of monsoon. And of course, 25% ROC and net cash balance sheet.
Yeah. Havels, we just spoke to yesterday, though. I must say that they mentioned that they are not as constructive on the festive season thus far, because his view was that in festive, people buy refrigerators and TVs and not air conditioners, and the inventory levels are very high. But he's very hopeful of a fairly better second half once the inventory is cleared off, because Lloyd's was the pain point, and that's where
loss
the thing could come back. Parag bhai, just wondering though, if cement was your high conviction idea, which you've gotten out of, rightly so because of valuations, where is it that you are now constructive on, or are you sitting on all of that in cash? So has cash gone up from 12% to even higher?
No. So cash is at 12% only. It has been deployed in companies like Havels, as I told you, something on India Cement. We have added reliance on this in this dips. BPCL, as I told you, DLF. And of course, couple of IT stocks like Infosys, LTI, Mindtree, Wipro, kind of names. So basically, it is scattered, but it is not a concentrated bet like cement, which I did. Because these are multiple sector stocks, and wherever I see, I keep deploying some money. But it's not a thumping the table like cement, which I did 6 months ago.
Okay, you can't always have table thumping ideas. I wonder if reality is not a table thumping, but a halfway there idea. You have 2 block deals today. So let's just look at what's happening with Oberoi and Lodha in the pre-open session. And that pre-open session has ended. Obviously, because of that block deal, it's an Invesco clean out trade, which is showing that pressure, 3% down on Oberoi Realty. You'll have Lodha also seeing about 3% down. On the other hand, Valor is doing okay. A lot of action in the primary space also as far as real estate is concerned. Parag bhai, are you seeing an opportunity over here, or you'd stay away right now?
No. DLF is right now we hold 5% of our portfolio in DLF. I remain very constructive. I think already I've said that 6,300 crore rental income, where they own 66% stake in DCCDL, plus 280 million square feet land bank. And of course, all these good projects in Gurgaon, now they have entered Mumbai also. So that makes me very bullish on DLF. And of course, Oberoi is one stock which I always like. I would definitely buy on dips. If it is due to some forced selling, definitely I will look to buy.
Okay. UBL on the charts. Chandan, IRFC, Sapphire Foods, any of these looking interesting? Anything that you're spotting in the pre-open session that you think has more to go?
Yeah, I think UBL looks interesting. It formed the multiple bottoms near 19, 20, 19, 50 marks in last 4 weeks, and now turning upwards. So I believe with support of 2000, it can head towards 2120 to 2140 kind of level. Sapphire Food also could be in focus. It has potential to see the recovery of 5 to 7% from current level. As of now, it can head towards support. With support of 330, I think it can head towards 352, 355 marks.
Parag bhai, any view on a State Bank of India?
So basically, I hold HDFC, ICICI, Kotak in my portfolios. I'm more bullish there because of the asset quality thing. Of course, in SBI also, I don't worry about asset quality too much. And valuations are very, very compelling. So I would definitely look to buy. The only concern which I had before this earnings season started in banks was NIM compression. It seems that from HDFC and ICICI results that NIM compression is actually priced in. Everybody knows about it. And in case of ICICI, as we all know, the NIM compression was much lesser than anticipated. Let's see in Kotak on 26th how much NIM compression they show. But it is for sure that for these 2 quarters, June quarter and September quarter put together, there will be a NIM compression of 25 to 35 bips for all banks. And I think that market has taken in its stride, and market knows about it. So the only bank where we saw big disappointment was Axis, where there was an asset quality issue. But all the banks which will not have asset quality issue like HDFC and ICICI in future can do well, because NIM compression is a very well-known phenomena. So I would and everybody knows that it will get reversed because of the CRR cuts and deposit and saving rate.
Okay. Thank you so much, Parag bhai, for speaking with us.